Good afternoon,
Yeah,
everyone, and Ramadan Kareem. Thank you so much for joining us today, and welcome to our webinar today, all about Sarwa's halal portfolios. My name is Akshay. I am part of the advisory team here at Sarwa. I look very excited about today's session because we always receive questions about Islamic investing, which is a very important topic to a lot of people. But maybe before we dive in, I'll give a brief introduction to myself. So as I said, my name is Akshay. I am one of the wealth advisors on the team at Sarwa, and my background is in banking as well as wealth management. I started my career at the Canadian Imperial Bank of Commerce in Canada, and following that, I worked for a British private wealth management firm. So I'm actually licensed and qualified as an advisor with the Canadian Securities Institute and also the Chartered Institute of Securities and Investments. And I've actually been working with Sarwa now for 2.5 years and look very passionate about what we're doing here. I'm a big fan of financial education, financial wellness. So really excited for the session today. I'm also joined by my colleague Faisal. Faisal, would you like to give everyone a brief introduction to yourself?
yeah. Thanks, Akshay. Hi, everyone. My name is Faisal Abdul. I'm also part of the advisory team here at Sarwa. Also, over 2 years and a half here at Sarwa. My background consists of fintech mainly across the UAE, Saudi, as well as the US. Ramadan Mubarak to you all, and we're really excited to present Sarwa's halal portfolios to you guys.
Amazing, Faisal. Thank you. So, look, when you invest, you're essentially directing your money to support companies' business activities, right? I think a lot of people tend to forget that. And it's really, really crucial for these investments to align with, your ethical beliefs or even your religious beliefs. And that's the reason why we decided to develop halal portfolios at Sarwa, right? To help people grow their wealth, but also making sure that they're adhering to their values. So as I said, right, today we're going to be discussing Sarwa's halal offerings, how we determine, these halal offerings and their compliance, and just a little bit more about Islamic investing and Islamic finance in general. So the presentation we're going to walk you through today, we're going to do that for around 30, 40 minutes, and then we're going to leave the rest for Q&A. So we're going to be addressing questions. So please feel free to use the Q&A function on Zoom, and we'll definitely answer those at the end of the presentation. And before we get started, just a couple of disclaimers for everyone in the audience. The first one is, look, we can't tell the future. I think a lot of people come into the webinars hoping for some stock picks or investment advice, but unfortunately, we don't have a crystal ball and we can't really predict what's going to happen in the market, today or tomorrow. And the second thing is, look, whilst this presentation is going to be applicable for the majority of people, please don't take this as one-on-one advice. Obviously, always do your due diligence when it comes to making any investment decisions. But if you do have any questions about your personal circumstances, look, please feel free to ask them in the Q&A function or just reach out to the team directly, and we'd be more than happy to help. So Faisal, I'm going to pass it over to you to start the presentation to discuss, what is halal investing.
Wonderful. Thanks, Akshay. All right. So halal investing, what is it? So halal investing refers to investment practices that comply with Islamic principles outlined within Sharia law. So the term halal actually translates to permissible in Arabic. And in the context of investing, it means adhering to ethical and moral guidelines dictated by Islamic teachings. And halal investing involves allocating your funds to businesses, assets, or even financial instruments that are deemed permissible or halal according to Islamic law, while avoiding investments in sectors or activities that are considered haram or forbidden. The key principles of halal investing includes avoidance of interest-based transactions, which is known as riba, steering clear of businesses involved in prohibited activities such as gambling, alcohol, tobacco, pork, and other unethical practices such as weapon manufacturing and distribution. Also, ensuring that investments comply with Islamic ethical guidelines such as fair treatment of employees, environmental sustainability, and social responsibility. So by investing in halal opportunities, investors can achieve, financial growth while adhering to the religious and ethical beliefs. Now, what are the halal solutions that Sarwa offers? Mainly, we offer two. Sarwa Invest Halal and Sarwa Save Halal. Briefly, Sarwa Invest Halal is our halal portfolios that consist of diversified ETFs and fixed income assets, also known as Sukuk, that aim to give investors coverage of global markets. And our halal portfolios consist of 7 different risk levels, from very conservative to aggressive, and the asset allocation changes dependent on your own personal risk appetite. And then Sarwa Safe Halal offers investors the ability to deploy their cash in Islamic money market funds, and such funds provide investors with opportunity to invest in short-term, low-risk financial instruments while adhering to Islamic principles outlined in Sharia law. Over to the halal screening methodology. Akshay is going to walk you through the specific steps that are taken here.
Amazing, Basil. Thank you very much. So yes, look, the Sarwa Invest halal screening methodology. And as we talked about before, right, in order to actually have a Sharia compliant investment solution, there needs to be what's called a screening methodology. And a screening methodology is actually when the fund managers or even the portfolio construction team, when they actually look at the underlying investments to make sure that everything is aligned with the Sharia compliant principles. So the methodology ultimately ensures that our investment offerings comply with Islamic principles. And there's 3 different filters that ensure that these basically take place. So the first filter is the business activity filter. And what this filter does is it makes sure that we steer clear from companies that are directly involved or deriving more than 5% of their revenue or income from prohibited activities. Now, that is deemed as activities such as gambling, tobacco, alcohol, and any other activities deemed as non-compliant with Islamic principles. So the first one is the business activity filter. The second filter that we employ is what's called the financial ratios filter. And this filter prohibits investments in companies with significant income from interest, also known as riba. So, or also excessive leverage, which is qarar. So basically making sure that there's no interest or excessive leverage that these companies drive income from. This basically ensures that the portfolios are not exposed to investments that generate income that in a manner that's inconsistent with these Islamic principles, as we said before. So the second filter. And the third one that we implement is what's called a dividend purification filter. And this filter is applied to companies that earn income from interest or prohibited activities. And in such cases, a portion of the dividends that's paid out to shareholders actually must be deducted and given to charity. And this ultimately makes sure that any income that's derived from the non-compliant activities is purified and not included in the returns to the investors. Now, these 3 key screens ultimately ensure that the investments are in line with Islamic principles. And it's really crucial to understand that for Sarwa Invest halal portfolios, we meticulously choose the finest investment solutions in the market, right? We're an independent company at the end of the day. We have an investment committee in place that goes into the market and looks for what are the best investment solutions available to clients. And we actually collaborate with some of the biggest asset managers in the world globally. And some companies such as BlackRock, Franklin Templeton, Vanguard, and ultimately deem what are the best solutions for our Sharia compliant and halal portfolios. The underlying investment funds, all of them actually undergo the screening methodology directly, and each fund is certified by Islamic scholars that actually ensure that they're adhering to these strict principles. Now, that's the filter that we have in place, right? Now, what I wanted to go through as well, right? We've just discussed what is actually in place that makes an investment halal. But let's focus on the specific ETFs comprising of the Sarwa Invest halal portfolios. But before we go into the individual ones, right? I want to, make sure that everyone's aware that across all of our investment portfolios, whether it's a conventional portfolio, whether it's a social responsible portfolio, or whether it's a halal portfolio, we still adhere to the same overall investment philosophy, right? With Sarwa Invest, we are rooted in, the Nobel Prize winning economic theory and philosophy known as modern portfolio theory, right? We strongly advocate for passive investing, emphasizing a globally diversified portfolio of assets. And this approach not only minimizes risk, but actually also enhances returns. So we steer clear from speculation or market timing. We understand that it's very difficult to consistently outperform the market. So we keep our investments very straightforward, and as a result of that, the costs are kept low, and that actually ends up preserving investment returns at the end of the day. Now, with the halal portfolios, we still maintain the same level of global diversification. We provide exposure to the US stock market, to foreign developed markets, as well as emerging markets, right? And these are ETFs that are provided by BlackRock, and they're all Sharia compliant. So you can see here on the left, we have the first one, which is IGLN. That is a gold exchange traded commodity that's used to hedge inflation and further diversify the portfolio, right? The second one that we have over there is ISDU. This is a US stock market ETF that is Sharia compliant. The reason why we have US equities is because they're considered more stable, more mature compared to equities in other markets. They're usually sought out after for their strong regulatory environment, established market infrastructure, and give you access to a variety of different asset classes and ranges as well. The third one, ISDW, that's a global market of a developed market ETF that's Sharia compliant. This is usually looking at companies that have advanced economies, well-developed financial markets. They're characterized by quite stable political systems, strong regulatory frameworks, and then a high level of transparency too. And they're often seen as a little bit more of a safe investment due to lower volatility as well as quite a high level of liquidity. The next one is ISDE. ISDE is an emerging market, halal Sharia compliant emerging market ETF. And these markets are usually characterized by higher growth potential, usually a little bit more volatility and risk, but usually a very high level of growth. Emerging markets, they provide a high level of diversification and access to economies that are expected to grow at a much faster pace than the more developed economies. And finally, we incorporate a Franklin Templeton Sukuk fund, which actually acts as a buffer during market volatility, offering a more stable and secure investment compared to equities. And finally, in the next slides, you're going to go through a little bit more about the Sukuk, so we'll come to that. But as you said as well, right, the halal portfolios they basically offer 7 different risk levels, ranging from very conservative all the way to aggressive. This ensures that regardless of whatever your financial goal is or time horizon, there's going to be a suitable solution for you.
Thanks, Akshay. Thank you. So Sukuks, right? So essentially Sukuks are often referred to as Islamic bonds. And they are financial instruments that are structured to comply with Sharia law. Unlike conventional bonds, that involve the payment of interest or riba, Sukuk represents an ownership in a tangible asset or a project. The issuer of Sukuk sells shares to this project or asset, and a portion of the underlying assets to their investors, who then receive a share of the profits generated by the asset, instead of receiving fixed interest payments or riba, like bonds. Essentially, the main difference between Sukuks and bonds, and we'll go into this on the next slide, there are 5 key features or 5 differentiators between Sukuks and bonds. And more or less, they are, if we can go to the next slide, please. 1, ownership versus debt. 2, types of assets. 3, valuation. 4, pricing. 5, nature of selling. So when it comes to ownership versus debt, as we said, Sukuk entail ownership of an underlying asset. Rather than being creditors, you have a share of the assets that are within the portfolio. Whereas bonds entail a debt obligation from the issuer. So that would be paid out through interest payments, which is non-halal and is considered riba. The second element is the types of assets. For Sukuks, the underlying assets must comply with Islamic principles, as we earlier stated. Nothing within the prohibited activities, so they're all halal or Sharia compliant assets. Whereas when it comes to bonds, the assets that back these bonds might not be permissible by Islamic law. Number 3, valuation. Sukuk's valuation is tied to the valuations of the underlying assets. If the underlying assets increase in value over time, so too will the value of the Sukuk. Bonds, on the other hand, pay out fixed interest payments that would be deemed as riba. Number 4, pricing. So Sukuk are priced according to the value of the underlying asset. bonds prices are determined by the credit rating it receives. And number five, the nature of selling. So when selling Sukuk, you would be selling a portion or a share of your ownership within the underlying asset. Whereas when you're selling a bond, you're actually selling the debt that is owed to you. So those are the five main differences between Sukuk and bonds, and why Sukuks are within the Sharia compliance framework and bonds are not.
Perfect, Faisal. Thanks for that. And I also just add to that, I think, I mentioned in the previous slide that, we also offer Sukuk as a part of our Sarwa Invest portfolios. Now, with Sukuk, similar to with bonds, you can actually have ETFs as well as mutual funds that have Sukuk, the same way that you've got bonds as well that have are incorporated into ETFs as well as mutual funds. Now, the key advantage of that is, look, you don't need to buy a direct instrument. Usually, especially with Sukuk, they tend to be quite high as an entry point when it comes to pricing, usually around $200,000. So a nice way of accessing them is through exchange traded funds or mutual funds. And that's why we have them as part of our portfolios as well. Great. So I am going to go through the next section. It's actually a little bit of an interesting one because we're looking back at, times of crisis, and specifically the financial crisis in 2008. And something that's quite interesting that a lot of people might have not been aware of is that Islamic finance, Islamic lending practices, Islamic banks around the time of the financial crisis actually performed were not as affected as more conventional, banks or as well as lenders. And a lot of people attribute that to, some of the things that we've talked about just now. But what I'm going to do is go through these two charts. And Islamic finance, obviously characterized by its principles of risk sharing, asset backing, ethical investing, actually demonstrated, pretty notable resilience during these periods of financial crisis. So this was a study done by the IMF, and they looked at how Islamic banks compared to conventional banks before the crisis and also at the initial crisis effects at the same period of time, both for conventional banks and Islamic banks. Now, before the crisis, right, leading up to the financial aid crisis, Islamic banks exhibited a pretty high level of stability that set them apart from their conventional counterparts. This was particularly evident in their limited exposure to more complicated financial instruments that actually contributed towards the financial crisis. Things like derivative products, things like asset-backed investments as well. But overall, their levels of profitability were actually relatively similar to their conventional peers, but just slightly outperforming them. So, things were relatively similar right before the crisis when you looked at Islamic banks as well as conventional. Now, if we look at the chart and the graph right next to it, this is looking at the initial crisis effects, right? This was around the time, I believe, of early in 2008 when everything was happening. In the aftermath of the crisis, Islamic finance garnered a lot of attention worldwide for its stability as well as ethical framework. The adherence to Islamic banks, to Sharia principles such as the avoidance of interest, those more speculative activities. This played a significant role in the stability during these times of economic turmoil. So as you can see, profitability was not impacted anywhere near as much as the conventional banks, and the credit and asset growth remained, still relatively strong. So and I think the main one that sticks out to me is the profitability, right? If we look at the bars on the left, profitability was down a little bit for the Islamic banks, but when you look at the conventional banks, it's a lot more significant. And I think, the financial crisis highlighted the resilience of Islamic finance and its ability to provide a stable and ethical alternative to conventional banking systems. I think this experience underscored the importance of Islamic financial principles and just promoting financial stability as well as sustainability. I think for a lot of people, you look at sustainable investments, you look at Sharia compliant investments, and there's a lot of expectations, or a lot of economists and analysts say that, look, for long-term investing, these tend to be very good options because of their sort of stability and the sort of lack of highly risky investment vehicles or derivative instruments. So there is a pretty big impact, when you look at it in comparison. But why don't we look at some of the reasons as to why, the Islamic finance and Islamic banks had this resilience in the time of the crisis. So the first thing is, the avoidance of interest-based transactions. So Islamic finance prohibits the payment of interest, right? The receipt of interest. And this principle led Islamic funds to avoid many of the complicated and risky financial products that were at the center of the crisis, right? Subprime mortgages, highly leveraged derivative securities, all of these sorts of things. The second thing is asset-backed financing. Islamic finance emphasizes asset-backed financing, where transactions are tied to tangible assets. This approach tends to be more conservative and actually less speculative compared to more traditional leverage-heavy practices that contributed towards the crisis, right? So, when you hear derivative products that are linked to, mortgages and other asset-backed securities. The third thing is risk sharing. So Islamic finance promotes risk sharing between parties, and this actually is a really good way to mitigate risk. In comparison, conventional finance often involves transferring risk to third parties, which tends to lead to more vulnerabilities, right? The fourth thing is the prohibition of uncertainty, qarar, and speculation, masir. So this is Islamic finance, and by nature prohibits transactions that have excessive uncertainty or speculation. This principle discourages the kind of high risk and speculative behavior that really contributed towards the crisis. And I think this is one of the biggest factors. A lot of the investments at that point in time were very volatile. They were rooted with a lot of speculation. And that's the reason why we saw, obviously, what we saw at that period of time. And the last one is ethical screening. So we went through the screening methodology before, and ultimately what that's doing is it's ensuring that the investments are in line with these principles. This process often excludes a lot of companies involved with activities that are deemed unethical or harmful. And that's, I think, a big reason why they've shielded Islamic funds from these certain sectors that were hit hardest by the crisis. So, it's actually pretty interesting because a lot of people never would have thought that, certain sectors certain, assets would have been much less affected than the others. But interesting to see that, during this period of time, Islamic finance actually performed quite well. So, Faisal, I'm going to pass it over to you for just an overview of Sarwa Save Halal.
Thanks, Akshay. So for Sarwa Safe Halal, this option utilizes money market funds, specifically the Emirates Islamic money market funds, which essentially are a low-risk, high-liquidity investment vehicle that consists of treasury bills, Sukuk, and other short-term financial instruments. With Safe Halal, there will be no fixed interest payments that will be paid out to you, but rather the total portfolio or the balance will increase on a daily basis based on market performance. There is no fixed percentage of return. It is, again, dependent on market performance. However, based on projections and based on past performance, the annual projected return is 3% annually. But again, this would be reflective and would be shown in your account on a daily basis. Also, we have no lockups on this account, so you can withdraw your funds partially or fully at any point in time. There are no minimums. There are no penalties or fees for withdrawing your funds whatsoever. When we compare the Safe Halal option to the traditional or conventional Safe option here at Sarwa, mainly the main differences are, one, the conventional solution, which is on the left, is held in cash, whereas for the halal option, it's held in a money market fund. The return on the cash account is fixed, it's 3% annually, whereas for the halal account, it's an estimated return or a projected return of 3% annually. However, it can be more, it can be less, it depends on market performance. For the cash account, there is virtually no risk because it's a cash account, whereas for the halal money market fund, it is considered very low risk again, and it's also short-term and highly liquid investment vehicle. There is no fee on the conventional Save solution. However, there is a 0.5% fee for annual management fee for this Save Halal option.
Amazing.
Anything
Thank you for that, Faisal.
else to add? Sure.
Yeah, so I think, one of the things also for this, we have a lot of clients that ask us, look, what's the difference between Sarwa Save Halal and Sarwa Invest Halal? Why should I use Sarwa Save Halal, and why should I use Sarwa Invest Halal? Would you care to maybe expand on that?
Sorry, can you repeat the question, Akshay?
Yeah, of course. I think so. We have clients who, some of them use Sarwa Save Halal for something, some of them use Sarwa
Yeah,
Invest Halal. Would you,
yeah.
what's the difference between those two?
Yeah, wonderful question. So this goes back to the point you alluded to earlier, which is it's dependent on each investor's or client's goal and time horizon, right? So ideally, if you have a long-term goal, you want to be investing your funds. So you want to be more weighted on stocks. You want to be more weighted on diversified global funds. Whereas if you have a more short-term or mid-term goal, and you can't take a lot of risk on that goal, then you want to be more conservative and either deploy the funds into Sarwa Safe Halal or maybe a very conservative invest portfolio with a risk level 1 or 2. But ultimately, it is incumbent on the investor's risk appetite and their own specific goals and time horizons.
Perfect. Thank you for that. So look, I think that is the end of our discussion in terms of the halal investment offerings, in terms of the Islamic finance principles. So I'm going to move over to our Q&A section. So if anyone has any questions, please feel free to write them into the Q&A function on Zoom, and we will get to that at this point in time. But maybe before we get started with the audience questions, there's a lot of questions that we get actually on a regular basis. So I wanted to maybe start with those. So first, I've got a question, that I get asked all the time, and it's how are Islamic investments certified, right? How are they deemed as Islamic?
Yeah, so it's a good question. Essentially, most of the funds, with the exception of IGLN, the gold ETF, have Sharia compliance certificates that are reviewed and renewed on an annual basis. So essentially, it's a board of qualified individuals that review the assets within each fund, make sure they adhere to the rules and regulations set out in Sharia law, the ones we alluded to earlier, which is that they're not in defiance with the business activities, that they do not derive any of their income or from interest-bearing activities, and also that they adhere to ethical rules and regulations such as avoiding weapon manufacturing and distribution. So there are bodies and entities that do go through these funds and certify them. Plus, these certifications are readily available to anyone that is interested or wants to review these certificates. You can reach out to us. You can let us know here in this chat or email us at our support or WhatsApp channel, and we can send you these certificates if you need them.
Amazing, Faisal. Thank you for that.
We have a question from Turkey, and he's saying, does investment in compound interest halal? Do you want to take that one, Akshay?
Yeah, so I think with with compound interest, ultimately the principle of compound interest is when you are investing in securities, and as they grow, they obviously compound over time. Now with with Sarwa Invest, the way that it works is that, and this is different to Sarwa Save, right? With Sarwa Invest, you're investing in a diversified set of assets that appreciate over time, and there's a couple of vehicles that are working in your favor. The first thing is capital appreciation. So when you purchase the asset, you basically are letting that appreciate over time with the hope of it appreciating over time. The second thing is dividend payments. So a lot of these, all of the ETFs also pay out dividends. So the combination of these and basically over time is what allows your investment to grow. Now, naturally, compound interest in that scenario is the assets and basically your wealth growing over time. So in terms of it being halal or not, in most cases you would consider it to be compliant, as that's the majority. That's basically different from buying, for example, a fixed deposit that pays interest. So these are two different things. So I think for most Islamic investors, they deem that to be completely fine. Perfect. So We have,
um,
I think we've got
go
another
for it.
question over here. Okay. So can you provide more details on Sarwa Invest Halal? What should be a good initial investment to begin with?
I can take this one. So essentially, the Sarwa Safe Halal consists of the uh, Emirates Islamic Money Market Funds, which is a Sharia compliant investment vehicle offered by Emirates Islamic Bank. And it's one of the leading Islamic financial institutions in the UAE. This fund provides investors the opportunity to invest in short-term, low-risk financial instruments while adhering to Islamic principles. Essentially, it can be comprised of treasury bills, Islamic bonds, or sukuks, and other short-term instruments. They're highly liquid, so they're easily bought and sold. They're very low risk, thus they are, suitable for short to mid-term goals because there won't be a lot of fluctuations and volatility on such funds. Um, yeah, so that's essentially what the Invest Halal product is. As to what should be a good initial investment to begin with, this is a very subjective question. It's dependent on, again, your individual goals, your risk appetite. What are you aiming to achieve with this fund? So if you'd like to dive deeper into this, just leave your email within the Sarwa, or you can email us after the webinar. We're happy to carry on this conversation with you.
Great, Faisal. Thanks for that. Got a question here from Mohammed, who's asking, what are the ethical standards that you base your investment choices on? Have you eliminated companies throughout a period of time based on observation? And you still didn't get the difference between Sarwa Save and the other, which works best for midterm to low risk. Okay, Mohammed, yeah, happy to answer those questions for you at the moment. So in terms of the ethical standards that we base or that you base your investment choices on, in the case for the Sarwa Invest portfolios, as Faisal kind of mentioned before, these go through a screening methodology, right? There are Sharia certifications that are conducted by Islamic scholars that ultimately ensure that the investments as part of the ETFs and the funds are deemed as Sharia compliant. Now, that's always going to be based on Islamic principles and Islamic finance. It's not going to be based on any other investment choices. And in terms of eliminating companies throughout a period of time, that's actually something that gets done by the fund managers directly. So the Sarwa team, for example, is not looking at the individual holdings because the asset managers themselves are responsible for doing that. And that's why they have the teams in place that ultimately take care of all of that. And then they make sure that, number one, obviously, that the investments are going to be Sharia compliant, and also that the investments are in line with the overall investment philosophy of that fund. And in terms of the difference between Sarwa Save and Sarwa Invest, so look, Sarwa Save is a high yield saving solution where you can generate around 3% return on your cash deposits. Sarwa Invest is a globally diversified portfolio. It's a model advisory portfolio where you can deposit funds into the account, and then ultimately we take care of the investment solution for you. Most people tend to use Sarwa Save for a more short-term solution, right? Because it's normally deemed for potentially an alternate to maybe a saving solution, or if you are maybe putting a down payment for a house in about 6 months to a year, a lot of people use it for that. The level of risk is much lower because there's not a high level of volatility. In the case of Sarwa Safe Halal, you've got, it's basically an Emirates Islamic money market fund, which is a very, very low risk investment security. With Sarwa Invest, you have the choice of the level of risk you're comfortable with. So you have the option for, more low risk investments, conservative investments, medium investments, as well as more aggressive, all along the halal portfolios. So it's going to be whatever works best for you, Mohammed. If you have a more long-term goal, then Sarwa Invest might be appropriate. If something's a little bit more short-term, you can obviously look at Sarwa Safe Halal. But I'd also encourage you to, book in a call with our team and kind of we can get a better understanding of what your, investment objectives are, and then maybe guide you on that.
We have a really frequently asked question, and it's what about zakat calculations? So we get asked these questions quite often. And essentially, when it comes to zakat, it it will vary and differ based on various schools of thoughts within the Sharia framework. So we highly advise that you would speak to an Islamic finance expert or a sheikh that is well versed in zakat calculations, and kind of maybe discuss what would be the best way to go about paying your zakat, because there are varying methods and varying calculations. So we kind of refrain from giving you a certain methodology or calculation, and we leave it up to you. And of course, after you consult an expert in this matter on how to calculate your zakat.
Great, Faisal. Thank you for that. We've also got a question over here, and I think this covers two questions. So a little bit about the 0.5% fee for the Sarwa Save Halal option. So Ahmed's asked, how is the 0.5% management fee calculated for Sarwa Save Halal? And let's say if I invest a total of 10,000 over an entire year. Ahmed, thank you for the question. I think we've got another question from anonymous about, or actually, sorry, from Riyaz about the 0.5% fee. So basically, when you invest a certain amount of money in the Sarwa Save Halal option, that money basically is going to be invested in the Emirates Islamic Money Market Fund. Now, that is going to grow on a monthly basis. Your investment will grow, but at the same time, you also will pay a management fee, which is that 0.5% per year. So that amount is going to be deducted automatically from the portfolio in the exact same way that it gets done for the Sarwa Invest portfolio, right? So, if you are looking at an investment of, let's say, I think you mentioned an amount of about $10,000. You're roughly looking at around $50, or sorry, I think it's $500 for the whole year, or $50, apologies, for basically the whole year. So you're looking at around $4 or so a month is basically what that's going to look like.
Great, thanks, Akshay. We have three questions that are kind of similar and tie into each other. So Anonymous asked, what's Sarwa's criteria for selecting halal stocks? And also Anastasia asked, what scholars do we work with? And Farhan asked, if we have a committee to confirm Sharia compliance. Sarwa does not have an in-house committee or scholars that review the portfolios. The funds that we utilize are, at least the stock ETFs, are BlackRock funds, and essentially they appoint scholars and sheikhs and Islamic financial experts and have them review those funds and then issue Sharia compliance certificates. Again, those certificates are readily available. They also outline the methodology that goes into the screening process and what is and what isn't deemed halal within their framework. So those, again, are readily available. If you would like to review them or receive a copy, just reach out to us. We'll be happy to provide them. But essentially, Sarwa does not then review the funds itself in-house. Actually, I'm not sure if you want to add anything to that point.
Yeah, no, look, I think you covered it well. I think one thing I'll add is, look, whilst Sarwa does have an investment committee in-house, right? And we analyze all of the investment funds, right? We're looking at things like cost of them. We're looking at the liquidity. We're looking at the tracking error. We're looking at the market capitalization. We also obviously make sure that the funds that we're selecting for the portfolios are in line with the overall market and in line with our investment philosophy. Now, with each individual portfolio type that we have, we will look at, for example, with the halal portfolios, there's multiple different Sharia compliant investment solutions available. So we look at a variety of different ones and make sure that we're picking the ones that are the best for our clients. And then to make sure that they cover all of those things I mentioned, right? To make sure the performance is good, making sure the costs are low, making sure there's a high level of liquidity. So we're looking at all of the individual funds. When it comes to the underlying, stock box, basically stocks that the funds are picking, BlackRock is the biggest asset manager in the world. They are masters at what they do. So they actually do all of that work, and they have fund managers in-house that do that. And they also employ Islamic scholars to take care of all of that, the screening methodology. So, whilst we do have an investment committee in place, the actual Islamic screening is done directly by the asset managers because they're the best in the business to do that. Perfect. So we've got a question over here,
There's also a
Mohammed.
follow-up to this,
Okay,
actually.
okay.
Uh, Essentially, the part of the other question is regarding purification of income based on the non-compliant stocks. So essentially, these funds that we just mentioned do provide the calculation for the the purification of those income. But again, I would then refer you to speak to an Islamic financial expert because this is also under the umbrella of zakat. While the funds do give you a clear calculation as to what should be purified, I would still take it up with a financial Islamic financial expert that would be able to guide you on whether to classify this as zakat or not.
Yeah, that's a very good point. I think that's definitely crucial. If there's ever any uncertainty about that, it's really a good idea to speak with an Islamic scholar that can assist you with that. So we got a question from Mohammed over here asking, does Sarwa automatically reinvest dividends? Mohammed, really good question. And the answer very simply is yes, we do automatically reinvest dividends. For anyone in the audience, who's not familiar with that, ultimately what a lot of these ETFs are doing, actually all of the ETFs that we invest in, they pay out dividends on, whether a quarterly basis, on a semi-annual basis. For our conventional portfolios, some of the ETFs also pay out on a monthly basis. Now, what happens is that those dividends, once they're paid out, they accumulate into the cash account of your Sarwa Invest account, and then they automatically get reinvested. And not only are they being reinvested, but they're also being reinvested to rebalance the portfolio to make sure that all of the allocations are still in line with your prescribed risk profile.
We have another question from Sayed. Sayed is asking why Sarwa Halal has a return of 3% annually. So Sayed, essentially the 3% annually is a projection or an estimate return. As you mentioned in your question, it is not fixed or guaranteed, unlike the conventional save account where it is a cash account. Thus, we are able to pay interest. However, that is not within the framework of Sharia compliance, and it's considered riba. So the Save Halal option offers a low risk, investment vehicle. It's highly liquid. It's second best, I would say, to a save cash account. And the 3%, so it goes into the risk reward kind of scheme, right? The higher the risk, the higher the reward. So in this case, since it's a very low risk vehicle, then the return is also within the lower end, right? So you're not gonna find high figures for returns on such an account. It generally will provide around the 3% mark.
Perfect. Thanks for that, Faisal. Yeah, and I think also for that, it's obviously we are looking at a saving solution. If you compare a saving solution in the marketplace at the moment, most banks are paying, usually around 0.8% per year. So 3% is a decent amount higher than that. And then obviously if you're after a high level of return, I think the Sarwa Invest Halal portfolios, definitely would be much more appropriate. So we've got a question over here from Riaz, who's asking, is it better to do a SIP or a lump sum with Sarwa Invest Halal? So Riaz, that question is really going to depend on your individual circumstances, your risk tolerance and a few other things. But when we look at it, like comparing a lump sum investment versus a more systematic investment, and if you look at it purely from the data, there's been a lot of studies that have been done on this, and they look at 10-year periods for globally diversified investments. Now, I'm not 100% sure if the studies have been done specifically on halal investments, but I imagine the results are going to be relatively similar because the overlap is still quite similar in the halal portfolios as well as a conventional portfolio, right? It's still giving you exposure to the global markets, emerging markets, foreign developed US markets as well. And when you actually look at, the difference between a lump sum investment versus the systematic over a 10-year period on that globally diversified set of assets, the lump sum investment actually outperforms the systematic investment around 67% of the time. And it kind of makes sense, right? If you look back at what was happening 10 years ago, if you'd invested 10 years ago and look at your results today, you'd be in a pretty good spot. And you can keep doing that for rolling periods of 10 years, all the way back to 100 years, and you'd still be in a very good position. But the lump sum investment, even though it might be better purely when you look at the data, what you're not taking into account is when you decide to invest a lump sum, right? The level of volatility that you're going to experience is going to be much higher, right? Over that 10-year period, the markets are not always going to be going up and up and up. There's going to be periods when they go down. There's going to be periods when they just go sideways. And then obviously there's going to be a lot of periods when they go up as well. So if you are comfortable as an investor to see a big lump sum suddenly go down, then you're okay to wait for it for a longer period of time to see it appreciate, then that is completely fine for you. But the advantage of a systematic investment is that it averages out your overall price per share. So instead of having an investment journey that's a lot more like this and this and this, you'd have a much more stable growth over a longer period of time. So I would say what we always recommend for people to do is always start with a lump sum and then supplement that with a systematic investment plan. It's a fantastic combination because you can get the advantage of starting early with a lump sum and also supplementing it so that at any points in time during that investment journey, when the market tends to go down, you can at least take advantage of that and add to your investments to take advantage of those discounted prices. So when the market goes back up, you're going to be in a fantastic spot. So I think a combination of both is always also fantastic to do.
Thanks for that, Akshay. We have another question from Anonymous. He's asking, the ETFs in Sarwa Halal Invest contain bonds which use interest-based securities. How come it is halal? So for our Invest Halal portfolios, we don't have bonds per se. We have Sukuk, which Sukuks are the Islamic version of bonds, essentially. So there aren't any Sarwa Invest portfolios that have traditional bonds. They're comprised of sukuks again. And thanks for this slide, actually, because this clearly outlines the difference between sukuk versus bonds and how sukuk is within the Sharia framework and bonds are not. So yeah, to answer your question, we don't have any bonds within the Invest Halal portfolios.
Great, thanks for that, Faisal. And then I think for a lot of people also, they've been asking the question, is this session going to be recorded? So yes, the session is going to be recorded. It's going to be sent to you, at some point, probably tomorrow. So if you've missed anything or if you're a bit late to the presentation, don't worry. We went over a few of these things as well already.
Yes, and also if you wanted to reach out to us to ask a specific question or anything that pertains to your specific goals, you can reach out to us on WhatsApp or email, or even on our website. You'll find a button that allows you to book a call with an advisor. So please feel free to reach out to us in case you have more specific questions or things that pertain to you and your own individual goals.
Great. So we actually have a question over here, and it's a good question. Somebody's asked, Anonymous, is there a potential scenario where you lose capital under the Sarwa Save Halal option, given that it tracks a fund? So Anonymous, fantastic question, because at the end of the day, when you are investing in any investment, right, or even when you have your money in a cash deposit, technically there's always going to be a level of risk involved with that. So technically, because you are investing in a money market fund, which is basically subject to investment risk, there actually always technically is a chance that that can go, below the principal amount. Now, the likelihood of seeing that is extremely low. And I think, since the portfolio that we've had has been around, we've never seen that happen. And as I said, right, the level of risk is so low that the likelihood is it's very unlikely to see that. But look, by all means, in certain circumstances, that could happen. And a lot of these things are tied to global interest rates as well. But I think for the track record that this fund has had, and for the whole time it's been in inception, we've never seen that before. Okay. Got a question over here from Anonymous saying, is there a plan to include UAE stocks on the Sarwa platform? So I think there is a plan to hopefully introduce UAE stocks on the platform in the future. At the moment, the broker that we work with, they don't actually offer UAE stocks, but it's definitely something that we would like to introduce potentially in the future. So thanks a lot for the feedback. And yeah, if there's anything else that you guys want to see on the platform, on the application, please let us know, because we can, let our product team know and bug them to get them launched.
We also have a question from Sayed asking, are you planning to have mid or high risk Sharia compliant schemes currently or in the future? Yeah, we actually do. So the Sarwa Invest option, as actually mentioned earlier, it ranges from a conservative risk level to an aggressive risk level, dependent on your appetite as well as your goals or time horizon. So the Sarwa Invest Halal option does well appetites. So I would urge you to maybe go onto our website, click on the Invest tab, and you'll get more information on the specific product.
Great. I've got a question over here from Tafiq. Tafiq's asking, can you elaborate how we can trade in Sarwa Gold? Marketing email received today. Yeah, I think this email was actually sent right before we hopped onto the webinar. So really, really interesting and cool feature that we've basically launched on the trade feature is that we have now listed the exchange, some of the top traded exchange traded commodities. There's about 8 of them. And if you just go into the Sarwa trade function on your application and you scroll down a little bit, you can see the top commodities. And we have listed one exchange traded commodity for each asset class or each precious metal or commodity that it is. And you have the ability to kind of look at that straight away and see if you want to invest in that. But there's also other ETCs that are available on the application as well. So I just recommend going into the trade tab and you'll be able to see it there and you can get started on your trading for that too.
There's a question from Anonymous saying, would love to see halal rating of stocks for Sarwa Trade can be done with integration with a few platforms. I think we touched on this earlier. So we're always looking to improve and expand on the features and functions within the platform. So this is something that we're looking into and exploring. So hopefully very soon we should have a somewhat similar feature that would indicate whether a stock is halal or not. So we always appreciate your feedback and always take it into consideration. So please keep sharing feedback like this, and we'll always relay it to our product and tech teams.
Yeah, thanks. And I think this is actually a feature that a lot of people want to see. And maybe I'll give some context as to why, we haven't released it as of yet. So Anonymous, with as you kind of mentioned already in this presentation, there's a lot very different school of thought in what some people deem as halal and what some people deem as haram. So as a result of that, we didn't want to rush to basically put out a list, because for some people it might not be, some people it will be, but it is something we're actively working on. So we want to make sure that when we do release this feature, it's going to be as well researched and thought about as we can.
Yeah, that also ties into the next question from Anonymous. And Anonymous asked, is you included Alibaba as a stock example in the Islamic funds, and it's how, I mean, you're saying that it's not Sharia compliant. How would it work? So based on the Sharia board that has deemed that fund to be Sharia compliant and halal, according to them it is. So again, going to Akshay's point, there are various schools of thoughts and different frameworks, and a good example to this is crypto. So crypto, essentially, there's no one unanimous or consensus as to is crypto halal or not. And strictly because of that reason, we have chosen to not give investors the option to add crypto to their halal invest portfolios, which you can do on the conventional portfolios. It's the investor's choice, but we have opted to remove that option for the halal portfolios because there is no consensus on the topic. However, in the end, it goes back to your own personal belief and your own framework with regards to your religion. So we do give you that option to invest in crypto through trade separately from your invest account.
Great, Faisal. Thank you for that. So I think we're getting close to the hour mark. So maybe we'll answer one last question, and then let everyone get along with their day. So one of the questions that we get a lot, and it's been asked, is, look, is there a difference between the performance in a halal portfolio compared to a conventional portfolio? So I think for a lot of people, they obviously want to invest based on their values, but they also want to make sure that the performance that they have with their investment is doing well for them. Now, the good thing is, as I said before, right, when we look at the investment methodology and framework, we're still gonna give the same exposure, whether it's halal, whether it's conventional, whether it's socially responsible, to the same asset classes, to the same geographies, to the same sectors. Each of our portfolios give you, the same exposure to the emerging markets, to the foreign developed markets, to the US markets, to either fixed income for the conventional side or for Sukuk on the halal side. And then also, there's always an inflation hedge. With the conventional portfolios, it is a real estate fund. With the halal portfolios, it's a gold fund. Now, as a result of that, we've seen that the performance for a lot of these ETFs and portfolios still are relatively similar. Funnily enough, the halal portfolios for our most aggressive halal portfolio actually performed the best last year. And I don't think that you need to sacrifice. A lot of people think, oh, if I'm investing in, a socially responsible portfolio or a halal portfolio, will my performance be lower? But it's definitely not the case. And I think, as I was saying before, there's a lot of economists, analysts, there's this whole school of thought that believe that in the future, a lot of these investments will tend to outperform. Look, that is purely speculation, and then we don't necessarily know if that's true. But the overlap in terms of the similarity in the portfolios and the exposure you're getting is still quite similar. So the performance is actually not that different. And some years it might be better on halal, some years it might be a little bit better on conventional, but overall you tend to see a relatively similar sort of aggregate return. Perfect. I think that is it in terms of the questions. I think we've got over here. We've got one thing from Faraz who said, thanks for the webinar. Can we get a link to the recording? Yes, for sure. We will definitely send out a recording, of this presentation to everyone who registered, and I'm sure we'll have it on some social channels as well. But look, with that being said, thank you everyone for your time today. Really appreciate all the great questions. And if there's anything that we didn't get to, or if there was any questions that you had, look, please don't hesitate to reach out by email. Feel free to reach out to us directly, by booking a call directly with our team. But look, I want to take the opportunity to wish everyone Ramadan Kareem to you and your loved ones. And thank you so much for attending. Faisal, it's been a pleasure as always. Thank you for your insights.
Thank you, Akshay. Thank you, everyone, for joining us, and Ramadan Kareem and Eid Mubarak in advance. And thanks again for joining us.
Amazing. Thank you.
Take care, everyone. Bye-bye.